All right, yeah. Hello, guys. I hope you guys are doing greatly well. Now, it's been a while we had a discussion. Today we'll be discussing on liquidity. I know that some of our admins in the group has been discussing lately on liquidity, and I know many of you will be like, "What the heck is liquidity?" All right, so that is what we'll be doing tonight. We'll be discussing more on liquidity. Let's go straight to the point. So let's ask the question. The first question is, what is liquidity? So liquidity simply means the orders, or probably you call it the order flows. So you can call it the order or the order flows. What do I mean by the order or the order flow? You call it the money in the market. So whatsoever you are trading is called liquidity. Your money, the moment you trade a particular coin, your money becomes liquidity, not until you withdraw the money. So let me continue and let me make. I just want to explain it in the simplest way. So I want to make sure it is very simple. So whenever you want to trade liquidity, I'm going to explain it to you, and I'm going to give an example of what it's all about. So the first thing I'm going to do is that I want to change this to line. All right. So I want to change it to line. So I will have time to draw some things here. Okay. So we all know that market comprises of higher high, higher low. Sorry. We have higher highs and higher low. This is a trendy market. A market that is going to the upside. So let's assume this is a trend. Oh, sorry. All right, so let's say this is a trendy market, and the trendy market to the upside, or you call it a bullish market, consists of higher high and higher low. All right, so now let's do something. Let me try and move this to this side. Okay, so now for you to know that this coin is trending upward, then there must be something around there that we call break of structure to the upside. So this level, that is the moment this coin goes above the former high, then it breaks the structure to the upside. Then it comes down. This same high, the same area becomes your okay, let me draw this thing over. Let me draw it over again so that you can understand what I'm trying to say. All right, let's put it this way. Sorry, I need to delete it. All right, let's do this way. Your market consists of higher high. All right, come here. All right, let's take this to be a bullish market. So let's assume this is a bullish market. I remember that every bullish market is comprised of higher high and higher low. So this high, this is low, this higher high, this higher low, higher high, higher low, higher high, higher low. So let me do something if I can. I want to make the class as simple as possible. That's what I want to try to do. So this is a low. This is this is high. This is higher low. This is higher low. This is higher high. I'm very sure I've explained this thing. Higher low, higher high, higher low, higher high, higher low, higher high. Okay. So now let's drop. No, let's do this way. Okay, let's do this way. So we have Let's have something like this. All right. Okay, yeah, let's have something like this. It gets to this level. So I want to do this for liquidity sake. Okay, it gets to this level. It moves up. Uh-huh. Then we create a double top. So here we create double top here. There is one thing we call double top, and there is another thing we call double bottom. So I'm trying to create something, though we're going to go into the chart and discuss it. But as you can see, the market keep on ranging. It goes up, come down, go up, come down, come up, creating higher and higher low. But when it gets to this level, it creates these two same highs, which means that automatically this area becomes our resistant area. Remember, resistance is always on the upside, a level on the upside where the price gets to and it goes back down. That is the definition of your resistance. And it's also called your supply area. All right. So let me move forward. Now, let's assume we want to get the liquidity from this trade. We've been trending up. Then you realize that from this level, the market come down. Let me do this way. The market gets to this place. Then what's wrong with this thing? It gets to this place. Oh, sorry guys. All right, the market gets to this level. Then from that level, it gets to the same place over again. Then move down, coming to this level. Then when it gets to this level, it come up, comes down. It's to move up, touch this level again, do something like this. Then it drops down again. So this just what I'm doing here is just a visual representation of how the chart. This is just a visual representation of how the chart goes so that we can understand the what liquidity is all about. All right. So now take a look at this. The moment the market begins to go up, goes down, begins to touch this area, they're creating different tops. Some call it so initially it creates double top, triple top, that begins to create different tops. Then psychologically we understand that this is an area of resistance. Now take a look at it. It comes down, touch this place, move, that it come back to the previous area, comes down, touch the previous area, come down, then touch this area, creating triple bottoms. So now, what do you now understand as the liquidity around this level? Now, what is the liquidity? In order for this market to create liquidity, you know, initially, let me delete this place. Let me delete this one. Let me delete this one. So the market gets to this level, and from this level, it comes down. Or let's do this way: it comes like this, then it comes down. Then yeah, it comes to this level again. It comes down. Now you will always think that this level that you're looking at, you will mark this place as a some resistant area. You mark the one below as the support area. So you will see that whenever the price gets to this place, it goes down, it drops down. And whenever the price comes to this support area, it goes back up. Now that's what you begin to think. So, and occasionally you believe that we mostly trade the support and the resistance area. We call them high quality trades, the support and the resistance area. But this is what liquidity does to us. Liquidity we make now. Let me delete. Okay, let me create something like this. Okay, okay. Now, when the big buyers in the market, okay, let me explain something now. Around this level now, you want to trade, what will you do? You meant you know that the market is coming to this level. You place your buy here. Where is the writing? This thing text. Where is the text? All right. So you place your buy here, which is at this level, because you believe that you place your buy at this level because you believe that the market will get to this level. And what do you do next? You place your stop loss below this level, SL. So because you know that initially from onset the market never breaks below this support level, so you will want to place your stop loss at this level. And you know that when the market goes up, what do? You place your entry around this level. You put your entry around this level, entry around this level. Sorry. Okay, when you buy, so when you are selling and you want your, when it comes on, you want your TP to be around this level. TP. So you want to place your TP here because you know that whenever it gets to this level, it breaks this level. I mean, it gets to this level and it comes down. And when you put on, let's assume you want to sell, you place your entry here and you place your stop loss slightly above the previous level. Don't worry, we're going to do this on the chart as we continue to move on. So you're going to you place your stop loss above this level. Now, when if you take a look at it, this same thing you do in the, I mean, this same thing you are doing is what majority of traders are also doing. So that's um activity or this the entry point that we all set here, and we set our stop loss around this level. All those orders, that's why I call them orders, all those orders becomes liquidity in the market. And for the market to either move up, sorry guys, for the market to either move up or down, it solely depends on liquidity. So if there is no liquidity in the market, that's when you see ranging markets. So in order for this coin, I mean sorry, in order for the price of Bitcoin to either dip to the downside, or in order for the price of Bitcoin to either go up, so there is always available liquidity at the above the stop loss. I mean above your resistance and above your support, there is always liquidity. And the liquidity simply means the orders that were being placed, like limit entries. Example, limit entries. So you set your limit entry here, you set your limit entry here, and the big guys in the market, they want to like make money. So what do? There is one thing we call liquidity grabbing. So now, since you see that you already set your stop loss around this place, then they will push the market. They will push it and make sure it gets to around this level. And what did they do around that level? Everyone that places a buy order or a stop loss at that level, they grab everything from every one of us. Every of what you've done, your stop loss, I mean your entry, your stop loss, it becomes liquidity to the market. So another thing do happen. Some people immediately they feel like the market has broken below the resistance, then it means that the market is bearish. What do? Then they create another entry from around this level. Let me put it there. Entry like market entry or limit entry. Let's assume limit entry. So let's assume we have limit entry around this level. So what do? The moment they put limit entry, trying to tell us that they've analyzed that the market is going down because of this manipulation and liquidity grab. They believe that the market is going down. So the moment the market gets to this level and they already enter the market, then the market what? It gets to this level. Okay, let me do something. So the market gets to this level, then it goes back. It enter into this place, come down, then go up again. So when it goes up, it means that every available fund around this level by hundreds of thousands of traders has been swept. It becomes liquidity. And the moment the money becomes liquidity, then you will see that the market will move drastically to the upside. So that is what is moving the market. Liquidity is what is moving the market. So the moment it push it to the upside. Now, when you think, you take a look at, the market gets to this level, it goes down. Whenever it gets to this level, it goes down. Then you as a trader, you create something. You will not be like, okay, the moment the market gets to this level, let me place my entry here. And immediately you place your entry, then you will be surprised that the market will break above and gets to this level before coming down. To get to this level, and a lot of people will be like, this thing is going down. Then you now see it will come back to this level. Then a lot of people will now set a long buy, expecting that the market is going up. Then you see the market come down again to this level. So what am I trying to tell you? Don't worry, I'm not gonna give the example on the this thing. All right. So remember, above every stop loss and above every resistance, there are liquidities, and below every support there are liquidity, and whatever makes the market move up is the liquidity. So all these stop entries, limit entry, stop loss, waiting that the market is going up, all the fake out, that's the essence of fake out, so that they may grab liquidity in the market. So the moment they come to this level, the market comes to this level, they grab the liquidity, they make you even think that the market is going to your direction. You know, like by causing the market to even get to this level, creating a higher high. Let's say it creates another higher high, then you, or probably it creates another high, and you'll be like, oh, the market is going up. Then immediately you think the market is going up, then it's dropped down drastically. Why did it drop down? Because the big guy's intention is that the market comes down, but they must first sweep liquidity to support that movement. So, in other words, liquidity are the orders you place, the limit order, the market order you place below the below your either your resistance or below your support. These are the liquidities in the market. So now, how do you trade liquidity? First, let me give you an example. Let's check into the market. Let's check into the market, and let's do a live example of what I've just explained to you. Let's do a live example of what I've just explained. All right, so I'm going to change this back to candlestick. All right, all right, so let's see something now. Now let's take a look at this. There are diverse liquidities here that were grabbed. I'm going to show you all the liquidities that were grabbed. So let me try and change it to 4 hours time frame. Then if it's not working, then I change it to lower time frames. Let's see the 4 hours time frame now. This is Bitcoin. Okay, yeah, I think this. Let's go for XRP. Yeah, XRP. Let's go for XRP. So I saw it while I was trading XRP this morning. All right, let's make use of XRP. Yes, I'm gonna use 30 minutes time frame. So I'm gonna delete all these the guajantes that I draw here. I'm gonna delete everything. So I draw all these things because I was trying to grab the liquidity area. All right. All right. All right. Let's come to the markets. Let's come to the market, guys. Let's come to the market. So first, before anything, draw your support and your resistance. This is on 30 minutes time frame. This has been our support and our resistance area. This hasn't this yes, it is. Now let's take a look at something. Take a look at something. Let me try and expand it. So you can see it very well. Let me expand so you can see it very well. All right, take a look at this. Take a look at this. Now, when the market begins to move up, look at this green candlestick here. The price gets to um 1.1973 when the price of Ripple XRP gets to 1.1, let's say 1.198. When the price gets to 1.198, what happened? The price goes down. Okay, no, it never goes down even at that level. When it gets to the level, you see, it's opened a new order. A lot of people believe that when the price gets to this level, this one point, they project that the price will get to this level. Okay, let's not be biased. Let's do something. Let me show you on a weekly time frame. Let me show you on weekly time frame. Let's not be biased. So I'm gonna expand it. All right. So on a weekly time frame, so over the years, take a look at this level. Price gets to this level. So let me just give it an horizontal line. So over the years, on multiple occasion, price has gotten to this particular level. Take a look at this. Price gets to this level. This is another level below one. This is another level. This is the level around this level. This is the level here. This is the level. So on, let's assume on 6 different occasions, price has gotten to that high that it begins to tank down. And when it gets to the high, it gets down. It gets to the high, it gets down. So now, people would have looked at this level historically, believing that the price of this token will get to this level before it goes down, which it does. Are you getting me? Which it does. Now let me go back to lower time frame that we're using earlier. All right, so this is the all right. So this is the weekly time frame. So see, it gets to that place on the weekly time frame, and a lot of people are like, wow, since it gets to this level, there is another level above this level that they expect that the price will get to, which the price will eventually never get to. Now take a look at what happened around this level. Now around this, what happened here? You see that after the market gets the price, let me expand my screen so that you can see it very well. All right, take a look at it. So when the price gets to this level, this one when and this candle opens first, take a look at something. Take a look at something. When the price gets to this level and this candle open, the first thing the candle does is that it goes up and hits those previous weekly time frame. And why did it go and hit that place? It went to grab liquidity. That's the first thing it went to do. It went and grabbed liquidity because a lot of people has placed their entry around that level for them to short it. They've looked at the previous data of this coin and they realize that whenever it gets to this level, it's going to go down. So there are a lot of orders around this level. That's why you see this very long wick. It's push up, touch it, grab a lot of liquidity, and they push the price down to around what level? So around 1.1. You see, from 1.2 plus to 1.1, you can see that very long bearish candle. Because, and a lot of people will be like, see, the moment the price is getting to this level, they would have placed their entry around this level. Many would have placed their entry around this level. Let me write entry. So many of these people would have placed their entry here, expecting that the price will go up. Because why? The price already gets to this level. So they would have placed their entry here, thinking that the price will go up, but eventually the price move up, touching this level, and it sweep every available liquidity here. Take a look at it. Every available liquidity sweep everything around this level. I mean, I don't want to draw. I don't want to draw. I just want to do something. Let me see this call out of it. So the okay. So every available liquidity in this area, so it drags all liquidity, then it push it down, causing a lot of people to lose a lot of money. Then when it gets to this level, see it creates another candle, push it down before, and when it pushes it down to this level, then it moves up, touch this level, we grab another liquidity, push it down to this level, move on, keep on, move on, keep on, grabbing liquidity here, pushing down, grabbing liquidity, pushing it down. So I won't be surprised if XRP at this level breaks above this level in order to grab another liquidity. If you take a look at the movements are in range. They're like a ranging movement, which means that the amount of liquidity is no more enough to push the price either up or to push it below. Now, what will happen? XRP will have to move up to around this level again, grab another liquidity. Everyone, and what do I call liquidity? Those orders, the entry orders, the limit entry, the limit entry, the stop loss, everything. We grab everything. In fact, it may break be above this liquid because a lot of people would have set their entry here, and when they set their entry around this level, they will put their stop loss here. They will put their stop loss here. SL, sorry. All right, they will put their stop loss around this place. So everybody will put their stop loss around this level and they will place their entry here. Entry. So they will all place their entry around this level. So, and what will the market do? It will now push it up, touch this level, grab every liquidity that has to do with entry and stop loss, destroy the entry, destroy the stop loss, then it will now push it down again. So these are the things that do happen in the market. These are the things that do happen in the market, whereby a lot of people keep on making money. Or it gets to this level, and you see a lot of people would have placed at this level now. A lot of people would have placed entry here. They would have placed their limit entry at this level, and they would have placed their stop loss here below the previous low. So they would have placed their stop loss here. So what will happen? The market will now drag down, capture every available liquidity here, then go back up. So these are the possible scenarios that may happen. And the moment you see these scenarios, what do you do as a trader? Then you have to wait the point of liquidity. So it is either you place your entry here because you know that there are a lot of liquidities available at this level. So when the market keep on going on, don't be afraid. Just try and place your entry here and make sure you place your stop loss here. So it is either you grab it or you lose your money. All right, it's just like a game. So it's the moment it gets to this level, so you place your not this exact level. You don't place your entry at this exact level. You place it above this level. And the moment before, and if you are to short it, make sure you don't just place your entry. Make sure you see that candle that will signal that the market is about to short. The moment you see that candle, then you can wait till this level, till the market. Okay, something like this. Let's just let me see this arrow. I never used this one before. Them just want to see. Okay, so the moment the price comes there, you can wait till it gets to this level. That is, it grabs every necessary liquidities around this place. Then wait till it get to this level that and wait ensure that it signals a sell. Then you enter. Then you push it down to this level. So this is how you make use of liquidity to make money in the market. So let me explain the last part again. Remember, whenever the market whenever the market breaks above this level, what do? You place your entry not at this level, but above this level, and you place your stop loss above, so the market can grab your entry and push it down. And let's assume this level, you won't place your entry here, you can place your entry below. Okay, let me put it there. Formally, you put it here, but you can place your entry below this level and place your stop loss at around this level. So what will happen? Whenever this market drag down to grab liquidity, it will not eat you here, then to go back up. I have you guys understand that? So these are the principles that will guide you not to lose money in the market. When you understand liquidity, you won't lose money in the market. But if you refuse to understand liquidity, you're going to lose a lot of money. So I hope you guys enjoy the class, and do have a great day. So I'll be having another video on trend line, how to place trend line, because I didn't explain that. In fact, even on this liquidity, I still have to explain two more things, which I'll make videos and explain it. All right, guys, have a wonderful day.